like as lenders are looking to lend or to purchase a bond, they're able to verify all of the like that the collateral is actually there in the contract. The collateral is not able to be moved. All of those types of things. You can't do that with a traditional finance company in the same way, and so it just makes a lot of sense. Another reason, I guess, is that DAOs really need this type of offering. Traditionally, there's been a few ways to raise capital, and the main one that we've seen today is essentially selling governance tokens. Like, and so yeah, that's the main one. In traditional finance, though, you have that as well. It looks more like selling equity tokens, but a huge piece of it. I don't know the exact breakdown, but let's call it like 30 to 50% of traditional finance companies are utilizing bonds in a really big way to raise capital. We're not seeing that yet in the crypto space, and I think it's about time that kind of we level up, and some of these DAOs that are getting more mature start looking at other ways to raise capital rather than just selling their governance tokens, as that's a pretty expensive way to finance growth. So
Yeah, that makes a ton of sense. So traditionally, DAO's kind of main avenue for getting financing is by selling their governance token, but that has all sorts of negative impacts. And these convertible bonds provide an alternative method for DAOs to secure some funding without selling their governance token, and to buy some time to be able to generate the stables, basically, or whatever token they're borrowing, to be able to pay that back without at any point selling any of their governance tokens. So that's pretty cool. And I can think one other avenue that the DAO has, the ShapeShift DAO has employed in the past, was using variable rate borrowing, and we used Rari for this. So Fox, thanks to our Chainlink's price feed, was able to get added as a collateral type to lending pools on Rari, and that was working great for a while until Rari got exploited and paused borrowing, and all the liquidity disappeared, and we still had this big loan outstanding, and we've been paying it down like 50K of stables per week for months now, chipping away slowly at it, and we're finally down to the final under 300K borrowed there. But the interest rate right now is like 75% APR. So one really cool and a compelling thing, I think, to the ShapeShift DAO about these convertible bond offerings from both Hourglass and Arbor was the fact that they're fixed interest rate, and we don't have to worry about potentially getting stuck with a loan with ridiculous interest rates that at some points have been triple digits.
Yeah, I'm adding on to that. Yeah, so it's just like basically this is like a structural component of like almost any growing economy. It's like if you look at America and like why it's so successful, right? As one of the leading economies, I guess, in the world, is because there's a lot of emphasis placed on the American dream, and building your own small business, for example, and being able to like grow a business, right? And if you're gonna have any sort of scalable growing economy, you need to have tools available to the corporations, I guess. And in this case, that this would be DAOs, right? DAOs that are earning actual cash flows and revenues like ShapeShift. The tools need to be available for them to sustain that growth well into the future, right? And if you're selling out equity like repeatedly as you're growing, that's like not a long-term strategy, because it doesn't incentivize the DAOs or the corporations to actually grow at some point, right? Because they've diluted themselves so much, right? So it helps maintain sort of that culture, I guess, of growth and long-term mindset.
That's a really good point. These bonds can be a much more sustainable way for projects who do have cash flows to basically get some funding and some capital up front, which they can then use to hopefully grow those cash flows and be able to pay back those loans, and if they want, maybe do another one at better terms once they've paid it back. So very excited to see now that these protocols are live, how they get adopted, and what this enables for DAOs now that we have a new primitive, a new form of financing available that just was not possible or wasn't feasible, easily done before. And now you guys have created these really awesome open protocols and beautiful UIs to make it easy for everyone. Super cool.
Yeah, I would like add too, I mean, just to double down on that point, is that if you look at like the TradFi space, if you want to expand your book of business, you're going to like take on debt as a big part of your balance sheet. Like a lot of corporations, if it's Disney or IBM or any of these companies, they'll have like 30 to 40% typically of debt on their versus equity on their balance sheet. And right now in DeFi so far, it's been like close to zero, if not zero. So like obviously as the space matures, DAOs are still in their first few years, but I think as the space matures, not sure if it'll happen this bear market and this bull cycle, but within the next few cycles, I think we really see that this market becoming bigger and bigger. So
Yeah, great point. Especially once, if or when DAOs start having to pay taxes. I know a big reason that a lot of corporations like to borrow is because that interest can be tax deductible. So they try to play the game and minimize their tax liability by borrowing and then using that capital to fund growth or to invest that capital. So I agree. I think this is just going to continue to grow now that you guys have opened Pandora's box.
and
All
then
right, I
like
think
obviously
go ahead.
DAOs can't get bank accounts right now either. I guess is like the thing that no one's saying, elephant in the room.
So true. Yeah. At ShapeShift DAO, we understand that very well as we have no legal entity and no bank account.
I mean, even if
So
you had a bank account, it's sort of just like, would the bank accept the DAO token as collateral? But probably not. And like, yeah, you're probably still getting a stable coin that's essentially controlled by the bank, right? So
yeah,
there's that aspect of it too.
it's so true. I was just imagining like somebody walking into a bank on behalf of the DAO and even just trying to have that conversation, and it would probably blow their freaking minds. That'd be funny to witness. All right, speaking of elephants in the room, I think there's probably a big one that we should address. I hope some people in the audience are thinking about this and have their spider senses tingling. So recently we all witnessed the epic downfall of FTX. And I think, as many of us know, a big part of what enabled this was Alameda using FTX's native token, FTT, which they held the majority of the supply of, as collateral for a loan from FTX, which, as we all now know, is funded with customer deposits. So how are these on-chain convertible bonds different, or are there some risks? And if there are some similar risks, like how can those be mitigated so that this doesn't happen again? Who wants to take that?
Yeah, I can start maybe, and sorry to just keep saying the same thing over and over again here, but really the big thing here again is transparency, and that the collateral with a lot of the reason why things happened the way they did was because the collateral was pledged several times over, and like no one really knew where funds were, and we had to just like trust that FTX was doing what they said they were going to do with the funds, and we all learned that that wasn't the case. That can't happen in an on-chain world, and so that's like full stop the biggest reason why hopefully something like FTX with the FTT collateral fiasco can't happen on chain. And also I guess maybe the other big piece here as well is like I don't know in all cases if the loans that FTX had were all over collateralized, but at least in Arbor's case, I believe it's the same in Hourglass's as well, is that all of the loans are over collateralized also. So that's a distinction to note as well.
Yeah, I think. Sorry, go ahead.
Oh no, I actually push back. I don't know if it's exactly just a matter of over collateralization, because at the same time, like the FTT, you could have over collateralized FTT tokens, but like really what was happening is they owned an exchange and then they were manipulating the price of the token. Right now, in this case, no one owns the exchange. I mean, this has been a little tough talking to potential lenders because everyone has like that same analogy, but these like offerings are, I mean, this is just a fundamentally different situation. Whereas like with Hourglass, at least, they're relying on chain link feeds. And so like with an exchange, you can make up the price for the token, but I don't really know how you would be able to do that. I'm not the engineer, but I don't really know how you'd be able to do that on this side. G, I don't know if you want to add there.
Yeah, the other thing that I want to say was that with if the problem is the value of the collateral, right? FTT, right? It's a centralized token. Obviously, again, like going back to what Arbor said, like you don't know what's going on behind the scenes. But ShapeShift, right? If you're worried about the ShapeShift collateral, anyone could go into the ShapeShift server and see what the DAO is up to, and like anyone can join the community calls. That's how we got in touch with ShapeShift, right? Was essentially just hopping into their server and seeing what was going on and seeing their revenues and all their information that's essentially like public, right? So and it's not like you need to wait for a quarterly report for that sort of information. It's not like only certain people have access to that. It's all like publicly freely available. So if any, like the only reason like the value of Fox token, it wouldn't be accurate is if there's like a market inefficiency type of thing, right? So versus FTT, it's like a centralized token, so it's much different.
Well said. Yeah, and I can imagine that you guys are getting a lot of like questions around this and having to explain this repeatedly. So I appreciate you guys doing it again. But yeah, I think that makes a lot of sense. Obviously, this FTX Alameda loans was behind closed doors. It was certainly not on chain and something that everybody could investigate. And if it was, then this probably would have come. It would have collapsed much sooner because people would have called them out on it. It was because all this stuff was done off chain behind closed doors that the market didn't really realize it until CZ realized that, okay, wait a second, they're using this FTT as collateral, and they own 95% of the supply of it. They clearly have a vested interest in propping that price up. And who knows what the actual collateralization rules were there, but typically like lenders would likely demand like a huge collateralization ratio for a token like that is used as collateral. And they wouldn't just look at the price of the token, but also the total supply and how much is circulating and how much liquidity is actually there. For Fox, for example, all that stuff is transparent and available. So very different. And I appreciate you guys kind of walking us through that. All right, I'm curious, just so that I can really wrap our heads around this end to end. What can one of you guys walk us, or maybe both of you walk us through the process of what a successful bond offering actually looks like from start to finish, from inception to actually getting funding and I guess even paying back at the end?
Yeah, so I guess I can speak to it, at least for Hourglass. So the way it works for us, we basically have three phases, three life cycles, I guess, or the bond life cycle is made up of three phases: IBO, active, and mature. So the first phase is the IBO phase, or the initial bond offering, where a DAO can create an IBO. And this is sort of the phase where borrowers and lenders come together to either commit to borrowing or commit to lending. And I say commit, but it's more of a soft commit because they can withdraw their commitment at any time. And then once the DAO or the owner of the bond sees that the lending demand is sufficient for what they want to borrow, they can go ahead and activate it, in which phase two begins, which is basically just the exchange, right? So borrowers get their stable coins and lenders get their bonds. And then at the maturity date, then you enter into the mature phase where lenders can redeem their bond and the borrowers can repay their stable tokens. So that's basically our end-to-end process and like life cycle of what a bond would look like from start to finish.
Yeah, and then on our side, essentially DAOs can come to the Arbor platform. They will actually, it kind of happens in two steps. Essentially, they will create the bond offering with the terms that they would like. That includes things like what's the max interest rate that they'd be willing to pay, how many, what's the maturity date, how long are they wanting to raise for, how long, what do they want the maturity date to be, what's the max interest rate that we're willing to pay, how long do they want the auction to run for, and so forth, as well as like what collateral token they're going to be posting and collateralization ratio. From there, they actually, once the bond's actually created, they then can list or like launch that actual issuance into an auction, whereby lenders are able to bid for allocation of the bond. And once the auction is over, the bonds are distributed out to the lenders, assuming they got allocation. And upon maturity, the DAO will need to repay the bond before the maturity date. And once that happens, upon the bond expiring, the bond will be redeemable for the amount plus interest. So that's that.
Super cool. Thank you guys for walking us through that. And that's interesting. So the DAOs basically decide these terms, the things like max interest rate, maturity date, collateral token and ratio, how much they're aiming to raise. And then it's kind of up to the lenders based on those terms to decide if they're interested, and they can actually, is it the same with both Arbor and Hourglass, where lenders basically bid, and it's possible that the DAO can actually have more demand and pay a lower than their max interest rate? Or is there any difference between the bidding aspect between Arbor and Hourglass?
Yeah, do you guys
So
want to grab that Hourglass, guys? Yeah.
yeah, so as far I don't think necessarily as far as bidding goes, but with I think one difference between Arbor and Hourglass is with Hourglass, if the DAO does repay early, then they don't have to pay the entire interest for the full length of the term. They can just pay what it is they owed in that time. And feel free to correct me if I'm wrong, Arbor, because I'm not entirely sure, but I think
we have a similar mechanism, so it not able to repay directly through the contract, but essentially if the DAO can repurchase those bonds that were sold on the secondary market, and then if they burn them, that has the exact same effect as repaying early. To do that from the DAO side, there also has to be like lenders that are willing to sell or want to exit their position early, and that's how it works with our system right now.
Be interesting to set up like a Uniswap V3 pool, basically, if the DAO did want to take that approach and give lenders the option to exit early, but also you could kind of give them some FOMO and be like, oh, whoever exits earlier is going to get a slightly better rate or something. I don't know.
Yeah, exactly. So yeah, we're actually, that's one of the next things that we're working on is directly on our platform, is adding a way for the lenders who purchase these bond tokens for them to be able to exit that position early, and then the DAO would be able to also do an offer early to purchase back those bond tokens, and could incentivize people to sell by adding some sort of premium to that. So it wouldn't be like the full amount of interest, but it would be like the current day plus maybe an extra month of interest. And that would incentivize people to sell those early if the DAO wants to essentially call those bonds and repay early.
Man, DeFi is so freaking cool. I love it. So this is super interesting. And Arbor and Hourglass clearly you guys are very similar. You're solving similar problems, or basically the same problem, but very interesting to see that you guys have taken slightly different approaches. And it's very interesting too that you guys are launching at kind of like in the same period of a couple weeks. So I think I mentioned this earlier, but for anyone who hasn't joined yet, ShapeShift is engaging with both Arbor and Hourglass as launch partners to basically offer these convertible bond offerings, very similar convertible bond offerings on both protocols, to kind of experiment. And I think a big part of what compelled ShapeShift to experiment with both was the understanding that there might be, you guys might have different contacts, different groups of lenders that are exploring your offerings, and that, we wanted to give you both a try, and it's been great working with both of you guys to set it up. And we're not quite clear on like which of these nuances are a better fit, and it seemed like kind of both of the protocols seemed like very compelling opportunities to solve this problem that DAO has with this other outstanding variable rate interest loan that we're looking to refinance. So I'm curious, like, what are the main differences between Arbor and Hourglass that a DAO interested in launching a bond should be aware of? Or I guess maybe we can also look at it from the lender's perspective, if there's any important differences from a lender's perspective.
Yeah, sure. I can go first on that. So yeah, one of the first differences is that we notice is like the priority claims. So in an Arbor bond, I believe the collateral sort of there is like a homogeneous collateral, and in Hourglass bonds, since we're using the ShapeShift price feed, we're able to create like a senior claim that's X amount of dollars, and a junior claim that's essentially the rest. So that's one difference, is that we have that senior and junior claim, and that's because we're built on top of the Buttonwood button tranche platform, which essentially takes any token, turns it into a rebasing token. So like $1 units to essentially make the accounting easy, and then the tranching protocol is what takes those $1 units and then creates like a senior claim and a junior claim. So that's one option. Oh, sorry, that's one difference. The convertibility option with Arbor, I believe, is at any time versus with the Hourglass bonds, it's at maturity. So yeah, they get a point there on that one. But another thing is the zero commitment IBO that we have. So basically, I believe, correct me if I'm wrong, Arbor, don't want to put words in your mouth, but I believe it's a soft commit is the way that you guys work for an auction. Hourglass, our IBO is essentially zero commit. So since it's like completely permissionless from the start, anyone can sort of go in and create like an IBO on a bond, and the DAO doesn't need to go through any sort of governance vote to like move like their tokens before the actual listing of an IBO. The only governance vote for treasury asset movement is before the activation of the bond. So allows DAOs to get, I guess, moving a little quicker. So those are, let me see. Yeah, I think those are the main differences. Oh yeah, and the other thing is, I guess, we have a penalty ratio that's built into our bonds. So that's basically because we have that senior and junior claim. We're able to have essentially customizable amount of that junior tranche flow to the lenders if the DAO defaults. Another way of looking at it is that like an Arbor bond has like a fixed penalty of like 100%. So Hourglass has a customizable penalty anywhere between 0 to 100%, and yeah, that basically offers additional protection to the lender. But yeah, those are some of the main differences we noticed. Arbor, you guys can speak.
Yeah, quick question. So as far as the interest rate, is that fixed in your system?
Correct. Oh yeah, you're right.
Okay.
So that's another one where it's just like our interest rate is essentially, yeah, it's fixed, but I think you guys are using Gnosis auctions, which allows you to set a maximum, I believe, right?
Yeah, exactly. So that's one of the key differences is, yeah, it's set in your system. And then for us, there's a little bit of market pricing that determines that final interest rate. So instead of just like setting the interest rate, it's setting the maximum interest rate from the DAO. And then based on how much demand, there's a final interest rate. And then, yeah, I would say that's probably one of the major things. And then not exactly sure how it works on the Buttonwood side, but for our protocol, there's also the expectation that the DAO repays unconditionally, even if the price of the collateral is lower than the principal plus interest amount. And we have the DAOs on our platform sign a promise to repay their multi-sig address. And in the case of a default, then that would be something that would be known and shared with the credit protocols of the future. So we also have that set up on our side, and I think that's mostly it. I guess on the Buttonwood side, is that correct, or does it work differently there?
Yeah, no, that's I think that's pretty accurate. I think the other thing was the prepayment option. So I believe like on Arbor, you guys when a DAO is repaying early, they still need to pay the full amount of interest. And the way we have it set up is that basically the interest is prorated according to like what time they issues a bond and like repays it right away. Then like lenders can also like redeem those bonds early. So that's like a benefit for lenders is if the DAO actually does repay early, they can just claim their tokens and go with it. But also the DAO can save interest, right? They don't need to accumulate more interest if they're ready to pay sooner. So that's it sounds like that's like a type of rope. I think that's what you're referring to, like your roadmap item. But
yeah, so for it sounds like then for the Hourglass side, it's guaranteed that the DAO can repay it early, and then for the Arbor system, they can do that early, but the lenders have to consent to it as well.
Got it. I see.
Awesome. I really appreciate you guys kind of going through and spelling out each of the differences. It's super interesting to see kind of the different design decisions you guys have made, and very curious to see what we learn. It's great to have some experimentation and some competition, some friendly competition like this in this space is the best. I'm curious. Let's look into the future a little bit. How do you guys envision this decentralized convertible bond market looking like in 5 years, assuming everything goes well?
Yeah, I mean, I think you said it best earlier. Is like, how is traditional finance ever going to be able to compete with this, right? It's like we think that over the next couple of years, this is going to be like pretty revolutionary going forward, and it's going to be sort of the go-to way for DAOs to go about financing.
Yeah, second that. Also extremely excited. Obviously, expect this to be a much larger market 5 years from now. And at that point, there will also be significantly more data. So there'll be a history of repayments. There'll be a lot of maturity on the DAO side as far as how they're like handling their financials. And there'll be better tools for pricing the risk, which is going to help significantly with this market being more efficient and being more mature. Also, super excited for other types of complementary products that are being built now. There's a team called Carapace, and they're working on a type of credit default swap product. So essentially, the ability for lenders to also purchase default insurance in case the underlying DAO defaults. So extremely excited for the different types of like composable products also being built and brought in. And yeah, that's my high level thoughts.
I guess I would really quickly chime in. I would double click on that. Very true that like once you see a bunch of DAOs that have already done it before, so Shapeshift is, I guess I would say, like known at this point as being like a huge pioneer in the space, been around for years. I saw that they were the first people doing the bond protocol. Now they're the first people doing Arbor and Hourglass. But I'm saying, like, what I was trying to say is, like, after you see Shapeshift and a bunch of these other DAOs do it, just having that history, and the awareness, and then once you're a DAO and you need money, and you don't want to sell your governance tokens, maybe you'll like try something that you wouldn't have tried before, or you wouldn't want to be. Maybe you don't want to be the first mover, but now like you'd be confident in this next one. So I guess I'll just add that.
Yeah, also excited to see. I think there'll be a lot more longer term debt as well that exists 5 years from now, where today in DeFi, most of the debt is shorter term. And definitely expect definitely expect there to be longer term debt in the future. So it might be possible to issue a bond for a period of 3 years or longer, for example, once there's more of a history for DAOs existing. And that's another thing that I'm excited for.
So much to be excited about. You guys are getting me hyped up. I totally agree. I think we're going to see a lot more DAOs over the next 5 years because it's such a new and innovative and better way to coordinate. And I could totally agree with you guys that we're going to see that these DeFi bonds are just so much better than CeFi bonds in pretty much every way. And I could totally see a lot of these institutional lenders being attracted and switching over from CeFi bonds over to DeFi bonds, and fully agree. Like we're just getting started here, and there's still so much to build, so much composability opportunities, and I'm really excited to see things we haven't even thought about yet that's now possible. So very excited and really honored that ShapeShift is launch partner for both. And yeah, if this does pan out, hopefully we're going down in history as the first successful decentralized convertible bond offerings. So speaking of this, what's next on your roadmap? What are you guys excited to focus on next now that you've achieved this huge milestone of launching the initial version of the protocol? You're working on V2 already?
So for us, there's a few things we have on our roadmap. I think the ones that we feel comfortable talking about right now are what we're calling the auction router and the auction oracle. And so earlier I had mentioned that right now we're focusing on DAOs that have Chainlink price feeds, but eventually we can expand past that because of what the Buttonwood team has been working on with their auction protocol. So essentially what we can do is set the interest rate in a similar manner to Arbor, where it's more of a market rate instead of a set one right off the bat. But we can also get a market value for the asset itself. So like right now, it's not really like, it's sort of arbitrary in that it's not set by the market, like the face value of the tranche, but eventually you will be able to sort of auction them out to find a price and then feed them into the hourglass bonds. And I believe with button auctions, I don't know if Matt or Button would want to speak more to that, but there are, if you check out the Buttonwood protocol, they do have BTC, ETH, and Ample bonds already set up there.
Yeah, and from the Arbor side, so the most immediate thing that we're working on right now, and we're getting pretty close to launching, is adding a order book to our site where there is the option for bondholders to be able to, that didn't get a chance to participate in the primary issuance, to be able to purchase these bonds. And then for people that want to exit the position early, so they don't want to hold the bonds for 12 months, for example, they have an avenue for exiting that position. So that's the most immediate thing that we're building that we should have released relatively shortly here. And the next big thing is a way to do native refinancing from the DAO side. So you see this pretty commonly in the corporate bond world, where instead of repaying the principal plus interest for the bond directly, more or less doing a new issuance and using the proceed at different terms for a larger amount, and using the proceeds of that to automatically repay the first issuance. And we're looking into adding that natively to make that very simple process inside of our platform.
Super cool. Well, I'm very impressed with what you guys have built so far, and I'm excited to see how you evolve from here. Especially now that you're live, it's great. It's so nice to actually get some real feedback from actual projects, actual DAOs and lenders to help guide the roadmap going forward. All right, we're getting towards the end of this. I guess one thing I really want to make sure we ask, Audis, these concepts are hard to digest. There's a lot of different terms that we've discussed here that are important to understand. How can a DAO that's interested in launching a convertible bond offering, what's the best next step for them to take? Like, I guess, do you guys have docs? What's the best way for DAOs to come get started? And I guess also for lenders who are interested in participating, what's the best next step for them? Where do they go?
Yeah, so we do have docs and like guidance on our website itself at hourglass.wtf, but also feel free to join like our Discord and send us messages on Twitter, or just any way you can get a hold of us. We'd be happy to help anyone out.
Yeah, and then from the Arbor side, Arbor.finance, we actually have a test issuance of the ShapeShift offering that is up now. You can participate in that. It's Gorley. I believe it's Gorley.arbor.finance. If you're a DAO looking to borrow, I would say jump into our Discord, say hello. Someone from the team would be happy to jump on and chat about what you're thinking and what you're looking to do. And from the lender side, next week, Wednesday, we'll be launching the official ShapeShift bonds. So again, Arbor.finance there for that. And
Beautiful. Thank you guys for sharing that. That's one thing I love about just DAO to DAO business and in this world, is that you can just jump into a Discord and talk directly to the team. So appreciate you guys having those doors open. All right, are there any closing thoughts? Well, we've got these friends here. Anything that either of you guys would like to share?
Nothing on my side, yeah.
Cool. I know I hate this question, so they're open-ended.
Yeah.
But I got to ask just in case I missed anything.
No, people answer it.
Sweet. Well, thank you everybody for joining. Thank you, Arbor and Hourglass. This has been a really, really exciting conversation. I know I've learned a lot, and I hope everyone else has too. And once again, just huge appreciation on behalf of the ShapeShift DAO for the protocols you guys have built, and for welcoming us as launch partners, and for all the support you guys have given throughout the process to guide us and to hopefully make this a successful offering. Appreciate you all. Hope everybody here has the best GM ever. GM Prince.
Yeah, GM Willie, long live ShapeShift.
Thank you.
See you guys.
Thanks for having us.
See ya.
Thanks.